Hi, everyone. Shannon Keneally here. Welcome to the second session of Symposia. Today we are covering tax department assessment and understanding financial reporting. We have Mike Fritt with us again today, as well as Tony Santiago. I'm going to hand it off to Tony, and he'll give a quick recap of the first session, as well as we'll do a quick round of introductions of everyone. Tony?
Yeah, appreciate everybody joining us for the second session. On the first session, we did pose a few questions on the forum, so if you guys want to take a look at that and follow up with any additional responses or questions you have, feel free to do that. We also have a assessment that we do, an anonymous assessment to help Mike and all of us that are presenting on feedback. I think we use SurveyMonkey that Shannon set up. So if you guys wouldn't mind giving us some feedback, anything that you think we could do differently or better, we of course want to hear that. I mentioned on the last session that we would take time on this one to at least let some of the members of the Symposia here introduce themselves briefly. If you wouldn't mind just starting off with just a quick introduction. Shannon, do you want to just introduce each of the ones that you can see who's on right now? So you can let each one of them know to give themselves just a short, brief introduction of your background and who you're with, so that we can all get to know each other better here.
Yep, I can do that. All right, we'll start with Alex Sundstrom.
Hi, Shannon. My name is Alex Sundstrom. I'm with State Street Bank. I head up our European tax function, so I'm responsible for managing a team of people that do compliance, planning, controversy, sort of the whole soup to nuts for the European region. I was based in London until yesterday, when I got on the plane and came over here. So now I'm based in Boston.
Welcome home.
Nice, thank you. All right, Andre? Andre Penchinoff, can you hear me? Okay, we can circle back up. Mike Casella?
Yeah, hi Shannon, hi Tony. This is Mike Casella. I am the head of tax at Baxter in a suburb of Chicago. I've been at Baxter for all of 7 months. Prior to joining Baxter, I served in a similar role for almost 7 years at Mead Johnson Nutrition, a U.S. manufacturer or U.S. multinational engaged in the manufacture of infant formula under the brand name Enfamil.
Great, thank you. All right, next we have Chad Withers. Chad, I know you said you're under the weather, so I'm not sure if you'll be able to talk with us today.
I'm here. I may just not sound like myself. So my name is Chad Withers. I'm an international tax director for Caterpillar, so I have responsibility for income tax matters for everything outside the United States, as well as our global transfer pricing practice. I've been at Caterpillar for about 2 years, and before that I was at Procter & Gamble for about 21 years before that. And that's probably it. So I apologize if there's any background noise because I'm homesick today.
No problem. Thank you. Christy Mayo. Christy. All right, we can circle back. David Ware.
Yeah, I'm here.
Hello.
I missed the first part. What am I supposed to tell you what I do?
Yeah, just a brief introduction, David, if you wouldn't mind, for everybody.
Sure. Yeah, David Ware. I'm a senior director of tax at now Johnson Controls. We merged with Johnson Controls. I was at Tyco before. We did the merger back in September. I was on the merger teams. That was kind of the last year of my life was doing that. Now it's a lot of integration work. Started at Tyco in 2009. Before that, I was a tax lawyer in New York City for about eight or 9 years. Is that sufficient?
That's great.
Thank you.
Thank you.
All right, Jerome Mihalowicz.
Hi, Shannon. Good job on the last name.
Hi. Thank you.
Always surprised when I hear it right. So I am the tax lead for Merck's global tax organization based in Kenilworth, New Jersey. I've been with Merck for about 7 months now. Prior to that, I was the tax lead for Zoetis, which was the animal health spinoff of Pfizer.
Great, thank you. Heather Crowder.
Yes, Heather Crowder. I've been at Phillips 66 for about a year. I'm managing tax counsel there. I came from ConocoPhillips, which was my first in-house job after leaving KPMG, where I was an international tax partner and in the client service business for 15 years.
Great, thank you. Justin Stalls.
Hi, yes, I'm Justin Stalls. I'm Vice President of Tax at Xylem. This is in the water business. It's based in Rye Brook, New York. I am new to Xylem. I've been here about 3 months. I have a background as an attorney. I've been managing senior tax counsel at Xerox for 7 years. Before that, I was with Latham Watkins, and before that, I worked with Internal Revenue Service for Xylem, that used to exist. I've had a peculiar transition. I was hired on here with about a year's supposed overlap with the VP of Tax, but that year turned into 2 months. So I'm lacking 4 senior directors.
Thank you. All right, Rissa Garrett.
Hi, can you hear me?
Yep, I can hear you.
Great. Hi, this is Rissa. I'm the Senior Director of Global Tax Planning at Bundy. I've been here about a year. Before that, I was at GE Capital for about 11 years, and prior to that, about 14 in public accounting, Ernst & Young, and PwC, both in Manhattan. Always doing international tax planning.
Thank you. Sarah Reyna.
Hi, my name's Sarah Rana. I'm the head of tax at Hologic, which is located in Marlborough, Massachusetts. We're a medical device manufacturer. We're kind of focused on the women's health space. I joined Hologic in January of 2016 from Medtronic. I was at Medtronic for about a year after the acquisition of Covidien, so I originally started my in-house career at Covidien in 2007, and before that, I was an M&A tax lawyer.
Great, thank you. Right, there's a lot of people who participated with their as their phone numbers. I don't have the rest of anyone's names, so if I didn't get anyone, please speak up.
This is Mark Leniato. Or did somebody else want to go first?
Go right ahead, Mark.
This is Mark Leniato. I'm Vice President and General Tax Counsel at BNSF Railway. I've been here for about 8.5 years. I just took over, as the new VP back at the end of January. And my background originally was doing tax litigation, both in-house and at firms, and then pretty much a little bit of everything, and now everything.
Great, thank you. Did I miss anyone else?
Yes, this is Christopher Rice. I'm with Shell Oil Company in the States. I am the VP for the Americas operations, covering all the Americas. I've been with Shell for about 20 years, and my most recent assignment was overseas in London, leading our downstream organization.
Great, thank you. All right.
Hi, Shannon. It's Christina.
Hi.
Hi. I'm the VP of International Tax Planning at Nielsen. I've been here about 6.5 years. I also have regional responsibility for all of the Americas and the CNAP region, including kind of, the day-to-day operations of those companies and what the impact is on our effective tax rate, as well as any global tax planning. Prior to joining Nielsen, I was with Cadbury for about 6 years. 5 years, and then Kraft acquired us for about a year. And then before that, 7 years with KPMG.
Great, thank you.
Okay, Shannon, that might be everybody who's on right now that is live. I don't know if Andre's still on or not. Andre, are you on?
Yeah, I'm on. Hi, Tony. Hi, everybody. Andre Petronov, VP of Tax Planning at Pfizer. Been at Pfizer just over 15 years, and also oversee the transfer pricing function as well as the planning team involved with all the major transactions of the company, and continue to look to
One more, Tony. This is Rob Spinander, the VP of Tax at Pinnacle.
Rob, your connection must be, it's a little weak for some reason. If you can,
okay, can you hear me
turn
now?
that up a little bit.
Is that better?
I'm still hearing muffled. Is anybody else having an issue with Rob?
Yep, still muffled for me as well.
Yeah, can hear.
All right, I'll pass, Tony.
Okay. Anybody else? All right.
Tony, I'll just introduce myself. I'm kind of support, but this is Tim Aragood, working with Tony and Shannon and Mike on these projects. And just so you know, when you hear my voice pop up, I retired last June with United Technologies for 15 years as the Vice President Tax or International Tax. At United Technologies, a 30-year career, including Ernst & Young, Ford Motor Company, and United Technologies, and a couple others in between there.
And as usual, Tim is very modest. He's more than support here. He's been at the the thought leadership component of doing what we're doing here, and actually we'll be presenting the next session on session 3. So we're happy as heck to have Tim on the team. The one thing that you can all rest assured is you are all some of the elite tax professionals in the world. We've handpicked this team for a lot of reasons. There's also a lot of diversity within it. In a lot of different ways, and I don't just mean racial or gender or anything like that, even though there's some of that as well. But there's a lot of diversity in the industries, inbound, outbound. That's intentional. Sometimes we can get great ideas from thinking out of the box. So this was a hand-picked group. We had 30 invitations. They were all accepted. One of the people, unfortunately, Terry at Delphi, is going to have to bail out of this session. He has already signed up for the next session. Delphi went through a major spin-off. They're spinning off one of their groups, and Terry's at the lead of making sure that happens. So he knows he's going to be on 24/7 call for the next 3 or 4 months at least to make that happen, right? So we are going to be inviting another person to join us, and I'll announce them on the next session as well. But thank you, everybody, for taking a little bit of time here. Mike, I don't want to cut into your presentation anymore because I know any more than we have. It's a great topic, so let's turn it over to Mike, and we'll go from there.
Okay, terrific. Can you hear me?
Absolutely. You're good.
All right. First of all, Tony, I'll second what you just said. Obviously, this is a terrific group, in my mind, of high-powered and high-profile tax people. And a word of advice to those of you on the webcast, make use of these budding relationships here. We're going to talk a little bit about that today in a couple of places, but these potential relationships that you can engender here could be of great value to you down the road. There are times you're not going to be able to talk about things, problems that you face in your position as the CTO with anybody else in the company or your family or whatever. And it's people like this that you might be able to reach out to and actually get some good advice from. At any rate, I think it was great to go through those introductions, and I'm happy to hear all of you on the phone. As a reminder, I'm Mike Fritt, and I'm the former corporate vice president and head of tax for FedEx. I retired a couple of years ago, like Tim. By the way, Tim's presentation next time is going to be 10 times better than this one. So if you're going to tune out of anything, tune out of this one, but not the next one. At any rate, I retired a couple of years ago, and I'm still engaged with a number of organizations, such as Tony's TaxTalent firm. Several organizations in Washington, D.C. that are working on business tax reform, and the University of Colorado. So in our last webinar, we talked about 2 fundamental questions that you need to answer to be successful in ascending to or performing in a number 1 tax position. Those 2 questions were, what are the critical success factors for that position, and which of those success factors do you possess and can you market? And which do you need to work on? Of course, you're not an island, so you cannot possibly meet or exceed all objectives of that position by yourself. That's why you all have departments of people. And your task is to manage your department to successfully meet, or like we discussed, preferably exceed your department's objectives, which done correctly should be in very close alignment with your own personal objectives. So in this regard, then we have the same starting point for your department's objectives as we did for your personal assessment discussed in our first webinar. In other words, you need to define, document, and align on critical success factors / objectives for your position, and hopefully therefore your department, and identify your department's key stakeholders. As you're going through this, immediately address any significant conflicts between your personal success factors, i.e. objectives, and your department's. You know, you can expect there will be some differences. For example, you might have personal growth objectives in your objectives, which would not be, of course, replicated in the department. But overall, they ought to be very close together, very similar, same as, and or parallel to the departments. When you're going through your objectives and determining these objectives, again, as we discussed last time, try and minimize the areas of disagreement between you and your stakeholders. For the most part, and we're not going to go through this again, your stakeholders for your department, for the most part, will be the same ones that are the key stakeholders for you in the #1 position. And again, try and minimize the areas of disagreement, because if you don't, you're going to have bigger problems down the road when you discuss whether you've achieved or exceeded those objectives. Also, as we discussed last time, clearly identify roles and responsibilities for gray areas that might cross departmental lines. You know, some of the examples we talked about last time would be foreign filings. If you're operating in a whole bunch of different countries and you don't have tax people there, you might have to have controller type people doing these filings or managing these filings for you, but you might be held accountable for that. So you need to identify that situation, and you need to ensure that you have input into who it is that's managing those affairs in a foreign country. Another example would be payroll taxes that might report up to a payroll group that might report into the controller's area. Key metrics or objectives should be as specific as possible. Last time I said I was going to go through these in a little more detail. I think because we took the time to introduce ourselves, which I think it was much more worth it. I'm not going to here. I'm going to go through these, and then I'm going to ask if anybody, by the way, as we go through this presentation today, if you have comments, questions, suggestions, whatever, feel free to make them as we go through them instead of just waiting to the very end. But specifically on this, I would like to ask anybody if you have disagreements with some of these things or additional objectives that you're willing to talk about. You know, sometimes these are confidential and people don't want to talk about them. But what Tim and I and Tony have seen over the years, pretty uniformly across the country with large companies like yours, are objectives like I've got listed here. Obviously, ETR, I think that's almost uniform with everybody. Cash taxes, risk tolerance, provision due dates, timely or early filing requirements for your department, penalties, budgets, of course, headcount, of course, employee satisfaction targets, or operating company or operations and or other functional objectives like treasury or accounting. So does anyone have anything that's not in this list that you would like to bring up, or would you like to take issue with something that's in this list? And if not, we can wait till later as well. Okay, well, moving on then. Once you have those objectives, and as I say, those are typical types of objectives. Once you have those objectives, you now know what you must do, all right? Now you're going to have to assess your department's ability to do it. And it's very, very similar to what we talked about in the last section. You're going to have to engage in a technical assessment, a leadership assessment, and this time, because it's the department, you're going to have to engage in an organizational assessment. The technical and leadership assessment, in my opinion, will require a position-by-position evaluation, top to bottom in your department. For your first time doing this, I would strongly encourage you to be directly involved in the assessment of people at least 2 to 3 levels below you. Obviously, you have to be for your direct reports, 1 level below you, and I would suggest going another 1 to 2 levels below that. It's time-consuming, but it's certainly one of the most important tasks you will undertake. You know, I said earlier, you're not an island. You cannot afford to act like an island. you're going to need these people to help you and your department achieve your objectives. And if you don't have the right people in the right places, you're going to have a harder time doing that. So one of your top priorities has to be, folks, what is your technical and leadership assessment in your department? Once you've done this the first time, then obviously you'll have to periodically and review and update those assessments as time goes on. I found that a department-wide succession planning process and or a high potential review process, or whatever you might call it, can make the technical and leadership assessment much more effective and efficient. And if you don't have any, I would seriously urge you to consider implementing one. This kind of process helps identify those in your department who do have the skills or can get the skills to get you to the next level, to take you where you need to be to achieve or exceed your objectives. It also serves, succession planning also serves as a tool for seamless planning of leadership for today and potentially well in the future. And I'll just tell you, when I joined FedEx 20 plus years ago, we did not have a formal succession planning, high potential review process, even though I wanted one. It took a few years to develop one, and in that regard, by the way, HR was extremely helpful. HR can be a pain, as we all know, from time to time. But on this kind of thing, they're outstanding, and they can be really helpful in helping you develop one. Once we got that developed, it just increased in its importance and its significance to us and to me as the number one tax person in the company as the years went by. And we had a succession plan for every management position in the department, including mine. And when I retired a couple of years ago, we already had the candidates identified, and it was a lot easier to go there. And I felt a lot more comfortable leaving with knowing that I had, good candidates that had been vetted with my boss and others throughout over the years. As you go through this technical and leadership assessment, the assessment will help aid you in determining if personnel changes in your department are necessary. For example, reassignments. I mean, you might have great people that are sitting in the wrong chairs. And if you just change the chairs or change the people in those chairs, your department's effectiveness and efficiency might increase pretty significantly. You might determine that you have to recruit external personnel. And, one of those tough things that all of us have to do, you might determine that you have to release existing personnel. No one likes to do that, but at the end of the day, if you're going to exceed your objectives, sometimes that's a necessary evil. And you're the one that has to make that decision. Concurrent with identifying who has the skills needed to achieve your department objectives, you need to determine necessary organizational changes to maximize your department's effectiveness. And in this regard, consider seeking input. For example, I don't know, I am assuming that all of you report into the CFO. It could be other people, but whoever that is, your boss, consider seeking input from your boss. Others that you might seek input from would be the chief accounting officer and the treasurer and the corporate development officer. These are three functions that tax, as you all know, works a great deal with, always on a day-to-day basis. So you might consider seeking their input as you go through a reorganization. Others might be the general counsel, operations VP, etc. But I also strongly encourage you to exercise some caution here. No one in the company, has the knowledge of what the tax department has or needs better than you do. And that's why you are in your positions. So beware when you seek this input. People may be providing you input, but they have, in some cases, a real lack of understanding of your department and what it needs to do. They also may have, and I'm not saying this is always the case, but it certainly has occurred in my career anyway, that they may have ulterior motives. I mean, I'll just use an example. It didn't happen in my company, but let's say the controller is working on a big project with you, and she would like her department better assisted by tax, and she would like to have you assign certain tax people to certain roles. but that may be to aid her in getting her department to achieve its objectives and not necessarily get you yours. So you have to be aware of that. If you're going to err on one side, it would be, I would suggest erring on the side of seeking input. But again, it's kind of like the old Ronald Reagan quote, trust but verify in this particular case. Also, consider external information. Benchmarking can be very helpful. Benchmarking also has its limitations because typically the best benchmarking is going to be against your competitors. You're facing competitors, and typically you're facing competitors who are not going to be willing to give you the information you need from them for this. So, it has its limitations. Informal discussions with TaxTalent, Tony's firm. I mean, this is a firm with a wealth of knowledge and information that can help you here. Other firms like his, other companies. You guys went through all these introductions early on. You are now starting to develop relationships. And this is what I said earlier. Sometimes as you go through a reorganization, there are very few people. It's a lonely position. There are very few people you can talk with. So you might be able to reach out to some of the people on this call if you develop relationships with them and say, hey, look, I know you're a CTO of whatever company, and I'm just kind of going through this. Have you guys done this, and what did you do with it? I've got this situation. Might be very helpful. Big Four firms, always a wealth of information. If you think about it, the Big Four firms who are working with your companies right now, the engagement partner, the tax services partner, since you're large companies, these are people who have had a lot of expertise, who have had a lot of experience and have a lot of expertise, been around the block. And they can tell you what they've seen in other companies. Confidentiality may prevent them from using names or specifics, but they can give you some really good generalities. Or old mentors. I had one who was invaluable for me. I know Tony and Tim both feel very strongly on this, but mentors can be very helpful in this regard too. So, reach out to them if you think they can help you get through a tough situation. Also, as you're going through all this, obviously you have to consider the age-old dichotomy of in-house employees versus outside advisors and all the issues that come along with that, whether it's a full-time FTE versus part-time, the budget implications, headcount, et cetera, et cetera. Okay? Anybody have any comments so far? Questions?
Mike, this is Tony.
Yeah.
I have a question on the department assessments because I've spent a lot of time the last 4 or 5 years with some of our clients getting them to adapt their assessment process. Like you said, most of them didn't have it. There was no regular schedule of sitting down and doing an evaluation on skills and leadership and so on. But when I did find those who did do it, or when they started to do it, they all leaned towards their assessing the individual from that perspective, as opposed to listening to the individual's career goals and objectives. And there was many times I was recruiting people out of companies that they didn't want what the company was offering them. Nobody was listening to them. Somebody was being pushed to move into management. I can think of a clear example right now where a large, very large pharmaceutical company, a biotech company, is trying to push this guy into moving into a leadership role, and he has no interest in doing it. And he's botching searches and things like that, and they can't figure it out. And we're in a confidentiality situation, so I'm having to get him to educate them. But I can't stress enough that you spend a little bit of time in these one-on-one assessments to actually get the trust established with the employees, to get them to tell you what they want and don't think that they want what you want. It's like the Big Four. Everybody thinks everybody wants to be a partner. We know after a while they figure out they don't. And the Big Four partners can't figure it out, right? They can't understand why the person doesn't want to be what they are. We have that in corporate as well. So I don't know what you did or have done when you were at FedEx to get the employees to open up about their career goals and objectives and listen before we start pushing them in directions. But I'd like you to speak to that.
You bet. First of all, you've hit the nail on the head. This is a point of great interest for me, Tony. Once we had our succession planning process robustly developed, not robustly, but later on it became robustly developed. What we did was we had annual meetings. I had annual meetings with my VPs and directors. And before that, and we talked about our high profile, high potential people and the higher level management positions other than theirs, of course. And they had relied on assessments from their managers. They had had pre-meetings with their managers, and their managers had pre-meetings with their individual contributors. This was all supposed to be a bilateral kind of thing. When the managers met with an individual, the individual should be telling the manager what he or she wanted, and the manager should be telling the individual what he or she thought they might be able to do and what the company might want from them. At the end of the day, what we kept telling people, and I repeatedly told people this, is, you know, each individual's career is theirs to manage. The company's not going to manage it for them. And if they let the company manage it for them, they're going to be, at the end of the day, I think they're usually going to be sorry about that. Because like you said, Tony, there are people who don't want to move into management. There are people who do, who might be slotted for individual contributor positions forever, or there are people who might be slotted from the company's perspective for management, but they don't want to be there. Well, they need to let management know that. And both parties have to be on the same track, but it's up to the individual to make sure that that happens. And, you know, we had annual reviews, but we didn't abide just by annual, or we didn't require, or we didn't do just annual reviews. If an individual wanted to go in and talk to somebody, they were supposed to be willing to talk to him or her, and you know, periodically listen to an update and make sure that they are on track for this. So I think it has to come from both sides, but it has to be, each individual's career has to be managed by that individual. But you're exactly right in identifying that sometimes these things do get a little off track, and that's not a good, in my mind, in my view, that's not a good circumstance. Did that answer your question? Does that help?
Yeah, no, it did. No, absolutely. Does anybody else have any questions on this area? Because
Tony, Tony and Mike, this is Mike Casella from Baxter. This is a little bit different than what you're talking about, but, you know, as part of my onboarding process here at Baxter, like I said, I've only been here 7 months, but as part of my onboarding process, to understand the capabilities I had within the function, I have about 40 people in my group spread throughout the world. I conducted 1 hour one-on-one sessions with everyone in the group within my first 30 days here. And I had a standard template.
No, good for you, Mike. That's terrific.
Yeah, I mean, I just a little bit of color behind it. I had a standard template that I used for those discussions where I asked everyone about their background. I asked them what their current responsibilities are. I asked them about their future aspirations. I asked them if they were in my shoes, what would be some of the first things they would address. And then to the extent that the individual had employees reporting to him or her, I asked them about the key talent within their groups. And I'll tell you, the information I got back, when you give people an opportunity to talk, it's amazing some of the things they'll say and some of the feedback you'll get. But I'll tell you, I got a lot of valuable insight. I kept notes of all my discussions, and even to this day, I go back and refer to those notes. So, I mean, the process is effective. It takes a little bit of effort, though, to do it.
That does. And you know, I did the exact same thing, Mike, when I started at FedEx, and I was shocked also by the types of information I heard from the people. I did one-on-ones with the people in my department. And I mean, I heard things from technical issues to personal issues. And, you know, we had a very demoralized department. Our VP had been fired before I came on and all that. And there was a gap of 8 months before I came on. So, you know, they were adrift, and just a lot of demoralized people for a lot of different reasons. And I would have never known some of the other personal things that had been going on, or how to handle some of those things, but for those one-on-ones. Can I ask, has anyone else on the on this webcast, has anyone else gone through that, the one-on-one stuff? Because I think that's fairly rare.
I did it. It's Jerome. When I started with Mark, I made a conscious effort to have a one-on-one with everybody. And it's good and bad, right? So I did it initially, but it's before everyone, you know, trusted me. And so it's that balance of, how much are they sharing, or they're always trying to think, are they, I worry whether they were completely open because they're worried about their own careers as well, the fear or insecurity, which they shouldn't have. It takes a while to gain their trust. But they certainly appreciate giving them the time. But I should probably revisit that periodically when, after they feel a little more secure with their position.
Right, right. Jerome, how long, were you internal Merck before you took over the top position, or did you come from the outside?
I just joined 7 months ago, but I'd say the average tenure in my department is 20 plus years at Merck. There's some that are younger, but there's a lot that have been here even longer. So I was the new guy coming on board.
Okay.
To a very
so you did have more trust issues there.
Yeah.
Yeah. Okay.
But it's helpful. I still recommend it.
Yeah.
Yeah, this is Mark Leniato. I agree that, I view it much more broadly, that, my whole job, especially in the beginning, is developing trust. And, I tend to talk one-on-one as informally as I can, because the more formal it is, the less likely people are to sort of open up. And then, what I really want is for people to be, open all the time if they disagree with me or they think we could do things better. And it's a give and take. It takes time.
It does.
I did something similar over lunch. So.
Sorry, go ahead.
Sorry, this is Chad. I had the same sort of approach as Marcus mentioned in terms of trying to keep it casual. I did lunch with everybody in the U.S. sort of individually over the course of, it was probably 5 months or something by the time I got through everybody, because we've got about 55 people here. So,
yeah.
And I thought it was helpful to hear a lot.
It's really interesting. So, Tony, what have you seen? I'm just surprised that there have been that many people that do that. I kind of thought I was the only one who did it. So, I guess I'm in good company. Great minds think alike, right? I'll give myself credit.
We've handpicked this group, so you're more the advanced people in the business from the leadership side. So, and you guys think and put yourselves back in your people's shoes more. So that's what I try to tell everybody is that we can't recruit people who are being treated fairly. Now, sometimes people outgrow companies. Sometimes companies outgrow people, but you'll all know it if you're communicating. What we have found is doing it on the front end is great. And it's what everybody should be doing. It's kind of a no-brainer when you think about it. Make the time, get to know the people. And as you said, you might try a mix-up of things. Obviously, doing it lunchtimes takes a little longer, but it might open the people up a little bit more. You're going to have to make a sense of that. I tell people to kind of pick and choose your people. Some people, they'll give it to you straight and easy and quickly in the office. Other people, maybe it's a lunch or let's grab a cocktail after hours if you drink, or a cup of coffee if not, whatever. But what I want you to think about is a recurring process here. I do this in my own firm, and Shannon will tell you this and everybody here, that I meet with everybody directly. And my firm's less than 20 people, so it's doable. I don't have a team of 55, but I meet with them personally every 3 months for a reassessment to make sure things are still in sync. It's usually only about 20 minutes, 30 minutes after you do it, when you do it like this. And then they know what it's about. Anything adjusting, anything changing personally that might impact their work. Do they need more flexibility here? Are their career goals still what we talked about? Are we living up to our end of giving them the things that we said we were going to do in development and training? Is there anything else they need from us? It's a two-way street. Here's what I need from you guys. I think a little more effort on this or that. And I'm getting to the point where I'm getting too big to where I'm going to start to leverage that to my team. So my direct reports will now take that responsibility over going forward. But it is tremendously informative, and it opens up the trust so that even in between those times, they know they can speak to me or anybody else in the company and not be uncomfortable. And I've had people tell me in those meetings that, they need to move on for various reasons. And I've had to tell other people that I think they need to move on for various reasons, but they all know, and it's not a shock. It's a development issue or, personal issue. I have a young lady leaving because of personal reasons in end of July. We hate to see her go. She's been a phenomenal asset, but until then, we've made it a highly productive arrangement. So whatever you do, I highly, highly encourage you to develop you and your team underneath you to continue to do those assessments on a more regular basis and bake it into your DNA. You will make my jobs phenomenally difficult to recruit your team away when they're still developing and growing. But you're also going to start to develop ideas for people to outplace them. I have clients who will call me up and say to me, this person, I want to keep them forever, but you need to make them aware of opportunities at this level because they're ready and we don't have a slot for them. Or they'll say, Tony, we're trying to carve something outside of tax for them. If that works, that would be great. But if, and I said, do they want that? Have you really asked them? Or are you just holding on to them without their input? So we confer on that a lot, but you need an ongoing process with this, guys, and it will pay back huge dividends for you in the long run.
Couldn't agree more. I would urge a little note of caution here, though, too, and that is that if you do this continually, obviously I think there's a great amount of value to doing it the first time right after you become, let's say, the number one tax person, or number two, whatever, you take over a group. There's a great amount of value. Down the road, you have to be careful because if you give the message to these, particularly people 3-4 levels down below, that they can come in and see you about their career issues all the time, which is a good message. But at the same time, never forget that they have managers that they report to, and they're interacting daily with those managers. And if you allow people to skip level, come up to see you, and make all kinds of complaints and say, well, I'm not being given a fair chance to do this or that, my manager's holding you back, you could get into some pretty dicey situations with your managers. And typically you're going to be relying a lot on those managers to run your department for you. So you can't undercut them. You cannot afford to do that. It's a little bit of a tension there you have to be aware of. That's all. Okay, so I think we're on to the next one. Once you've, where were we here? We were talking about the organization. Oh yeah, seeking input on your organization and doing an organizational assessment. Once you have gone through your technical and leadership and organizational assessment, based on that, then my suggestion is you develop an optimal tax organization. What would be the best tax organization for you if you had no limitations on it? But of course, there are always limitations. So then you're going to have to back off of that and adjust it to a realistic best structure. And I'll just give you a little piece of advice here. I always had, and we all go through a lot of these reorganizations during our careers. And, a major acquisition will bring additional people on board, and you have to find a place for those people. You have to reorganize them. If you have somebody in a key position that leaves, you'll have to reorganize them. So, in 20 years at FedEx, I probably did, 4 or 5 reorganizations, or maybe 6 or 7 reorganizations, and probably 4 to 5 of them, 3 to 5 of them were major reorganizations. So when you're doing this, I never tried to do it during the week. The phone's ringing off the hook. I had an open door policy. Anybody could walk into the office anytime they wanted to. And it's just really difficult to have organization charts sitting out on your desk and allowing people to walk in and come chat with you about something, or handling the latest fire that crops up during the day. So what I did was I would come in on a weekend, early Saturday morning. Everybody knew that the door was to my office was closed on weekends. That was my time to do my stuff. And if I had a reorg going on, I would put everything out, close my door, and I'd work on it all weekend if it took. And by Sunday night, if it took that long, or Saturday night, however long it took, I had my optimal tax organization, and I had backed it off to a realistic best tax organization. So that's what I would suggest to you. I don't think you can get to it very well during the normal work week. Once you have a realistic best structure, then I would suggest that you vet it with those people who will have major influence on it, and never, ever forget HR in this regard. Again, they can be a pain. They can be considered an enemy at times, but at the end of the day, if you're going to have a major reorganization, you're going to have it approved by HR. And it's best to do that before you've gone to your boss and said that this is what you want to do. Get their input, because they're going to have legal input. They're going to have company policy input, which could dramatically affect what you're thinking of or proposing. Also consider vetting it with people who will be most affected by it. You know, choose 1 or 2 or 3 of your key people in your tax department, people who you're going to need to make this reorganization work. If you don't have their support and it doesn't work, that's something you need to know before you trot this thing out in a department meeting. Other people that you might talk to outside of tax might be people in accounting, treasury, M&A, operations, etc. But in all of this regard, keep that list to a very small number of people. You can't afford to have this getting out. And so keep it to a very small number of really key people. And remember, when you're talking with people outside of tax, what I mentioned earlier about them not having knowledge of tax, maybe having ulterior motives, other motives than what you're trying to achieve. So keep that all in mind. Once you have all of that input, then you adjust your structure for that. Take it to your boss for approval. Hopefully you've kept her or him apprised as you've gone through this. What I used to do with my boss, he was terrific in this regard. He was a hands-off manager. I'd go to him and I'd say, well, we just made this major acquisition. I've got these 10 people joining us. I need to do a major reorganization. You say, fine, do it. Come to me, for approval when you're ready with it. Well, what I would do in the interim is, as I reached major milestones, let's say over the next couple of weeks, I might have lunch with him personally and say, here's what's going on. And he would be pretty much up to speed with the major issues with it. So then when I had the final thing all put together, I'd take it to him and generally get his approval. And then I'm not telling any of you anything here, but once you have a reorganization plan and it's ready to go, you're sitting on a keg of dynamite, folks, and you're going to have to move really quickly. I would typically do a meeting with my boss on the morning of day one. If he approved it, then I would come after lunch and I would meet with 2 or 3 of my key people in my department early afternoon of day one to let them know what's about to happen. And then I'd call a department meeting that afternoon for the next morning. And I would announce it the next morning and let it out. I mean, you cannot afford to have a lot of leaks occurring, because if that happens, then people are going to start sniping at the edges of it, and it will blow up in your faces more quickly than you can imagine. Any comments, experiences in that regard from anybody? Okay. We have to talk about financial reporting. As you go through your reorganization, never forget the implications of financial reporting. And this is not just for reorganizations, but it does have an important part to play in reorganizations. You all have to be aware of the, particularly large public companies. You have to be aware of the financial implications of what you and your department are doing. You might be able to you might do the best things from a tax standpoint, and you may even have experiences in this, that when they're translated into financial impacts on the company might be significantly mitigated or reduced, or even turn out negative. So you've just got to be aware of this. Obviously, things like ASC 740, you have to be aware that you have to have expertise on these areas. And in some cases, certainly in my company, we had a tax accounting group in the tax department, which dealt with the financial accounting implications of most of what we were doing from a tax standpoint. So when I did a reorg, obviously they had to be considered in that reorganization. But even beyond that, there are things that, in our company, for example, leasing rules. Leasing was really important to us. For a long time, we leased a lot of our aircraft, and we needed to know the financial implications of what we were doing from a tax standpoint and how the tax rules affected the finances for leases. And there are just lots and lots of these kinds of issues. So again, as you're going through a reorganization, consider this and consider how you would either manage it internally or how you manage your relationships with the accounting and the controllers group. And I think, Tony, or Shannon, did you attach the links to a couple of decks that explains some of the more fundamental aspects of tax accounting or financial accounting for tax matters to the conference call information? Or where can people access that?
It'll be in the follow-up email as well as the forum.
Okay. Well, Tony and Shannon have a couple of slide decks, and I would really encourage you all to take a look at these. These are terrific. They're just an explanation of the tax and accounting financial implications of some of the things that you all do in the tax area. And you can use these either to educate yourself or other people, particularly people outside of tax or accounting. They're terrific for that, and I would encourage you to look at those when you get that follow-up email from Shannon.
Yeah, if everybody.
Yeah, go ahead.
Sorry, Mike. I just wanted to add real quick on that before you wrap up on those things. They were designed by two people I hold in pretty high regard, and I asked them over a period of time to put a training program together for some of my attorneys in particular who didn't have an accounting background and were in the planning area. And this was when we were starting to get very uncomfortable with the whole issue with SOX and where were the implications. So they designed this into 2 PowerPoint slides, and I encourage anybody on their team who needs a brush up on it, even if they are an accountant by background, but especially if you have non-accounting by background, even if they picked it up in public accounting. These guys did a very good job of putting together pretty comprehensive slideshows in a nice condensed manner. So they're yours to use as you see fit, and hopefully they'll help you kind of get some of your people up to speed there. The other note for you guys is on TaxTalent, free to you guys, is a tax training events database. We take every training event in the country, we database it up to 12 months ahead of time. You can access it and send email reminders in the system 30, 60 days before these events. But if there's a keyword search, and if you need to brush up people on any topic, international, fixed assets, tax accounting, ASC 740, whatever it be, use that database there, because it will highlight what are the best training events out there available to send your staff to if you're trying to get into this whole development mode with them and your assessments. It ties together quite well here. Most people don't know it's there, but it's the only one of its kind out there, and it's one-stop shopping. It's free again. This is all just paybacks to the profession. So I'll also have Shannon put a link up there for the training events database as well.
Yep,
sorry, Mike, you can go ahead and wrap up.
No, that's good. That's good. Yeah, and I just second again what you just said, Tony. We go back to some of the communications discussion we had in our last session. And these decks, I look through these, and these are excellent ways of communicating some of these more complicated matters from a tax and financial, because a lot of people's eyes will glaze over, and these things can be used for, like I said, especially people, well, not especially, but including people outside of those two disciplines. That's all I have. Be more than happy to entertain questions or comments or any experiences that any of you have had on the topics that we've talked about today or even last time.
Hey, Mike, it's Alex Sundstrom. One comment I wanted to, one comment I wanted to circle back on. You know, you talked about sort of the optimal tax department and the realistic tax department. And one thing I've struggled with a bit is that depending on your constituency, your CFO may have a pretty, want to cut costs and have a pretty narrow or cabin view of what realistic looks like. I don't know if you have, experience or advice you can share on that sort of process of, negotiating for effectively a resource negotiation, but how you sort of manage that question as to sort of how you balance the optimal and the realistic in that design.
You're exactly right, Alex. And I'll bet everybody on this webcast has had the same thing or is going to have the same issue or question over time. And you know what? You have it repeatedly every single year once you go into the budget. I mean, it's the same thing, and it never ends. And if you think about it, your CFO, that's his or her job. I mean, it's just to manage the costs, starting with his or her own department. So you get or his or her own area. So all of their direct reports get hit harder than anybody else in the company. That's the way I always viewed it. But the way to address that, and it's hard. I mean, first off, we just say it's hard. The way I addressed it was just say, hey, look, we can be penny wise and pound foolish. We can cut out several $100,000, maybe even $1 million or $2 million here or there out of my budget, but then your ETR is going to increase, and you know what that is. We will spend many times over that with a higher ETR or cash taxes or whatever it might be. Those are your levers, and you got to be careful how you use those. But I did use them, and I was not shy about using them at the right times. I couldn't every year go in and, you want to be careful about losing your credibility too. You can't play the games and go in there and say, I'm going to give you a 38% ETR, and she goes ballistic on you. And then you say, yeah, but if you give me another $2 million in my budget, I'll take that down to 18%. Well, that's, if you do that year after year after year, you're going to lose credibility there. So you have to be careful there. But it is a trade-off. And then you also have to understand, I think, at least I did, there were times when, like the Great Recession, for example, everybody was retrenching. And we were too. I mean, salaries were cut, people were cut, and there was just no question everybody was going to share in the pain. So even though we might not be able to do quite as much as we would have liked with a bigger department, we could not be the exception to the rule. And I was not going to go up to my CFO and say, we want to be the only one in your division that doesn't, participate in these cuts. So it's a whole bunch of things that come together. But yeah, we had that. And typically, like I said, I would try to just address it with the trade-offs that he or she was going to be creating if they wanted to not give you the extra budget or wanted to cut their budget. Does that help at all, Alex?
Yeah, no, that's good perspective. Thanks, Mike.
Anybody else
this is
has
Mark.
on that?
Yeah, Mike, this is Mark Leniata. I just want to ask a follow-up question. I've tried that before, and I said, what would you rather have, a headcount reduction or significant tax savings? And they said, yes, I'll have both.
There you go. That's why. Is that a he or she? Is it your CFO?
Yes.
That's
so
she or he?
So I think that it's a she. So I think that.
Well, that's why she's sitting in that chair and you're sitting in the tax chair.
Yeah, and the more I thought about it, I actually think that's the right. I mean, obviously it's the right answer because she said it, but I mean, it's the right answer because we've got to be more productive. We can't just cut the number of people, which I tell my group. Sure, we could have 3 people in the tax department and just wait until the IRS comes after us, but that's not our job. Our job is to do the compliance and then save as much money as we can for the company and do it as efficiently as possible. So I think we're being
well. That's good. No, you're right.
At the same time.
That's right too, Mark.
Mark, I agree with your point. This is Christopher Rice. One of the things that we've been doing now is in a constrained environment, it actually leads to some very good discussions with the businesses. And so we have really started thinking, we've had them before, we've just been a bit more targeted, a bit more thoughtful about having the discussion with some of our business and finance managers about we have choices. And it then really begins to, if you start looking at the pieces of your work that are optional, then you can really start thinking about where are you going to be, where can you place the highest value. Because you're right, Mark, we have to, we're not, we can't go down game, we'll only play for so long. And from there, then you can make choices. I've found that the best way to do it is make choices together around what we're going to do and what we're not going to do. And then as things happen, we've gone into it together, and it makes for better, I'll say, neighbors if things go awry in the meantime.
Yeah, and I just have one question that maybe we can follow up on in a separate meeting. That I'm getting that conversation's going really well with my CFO. She's very interested in, we can discuss if it's low value work, and she can agree with me that we should just drop it. But then to try to change the mindset in the department to get everybody thinking that way, especially the compliance people in the department, that's sort of antithetical to how they look at things, where they want to do a good job and do everything. And if I tell them you can let go of some stuff, then it's very hard to change the mindset.
Yeah, I think that's a really good point. I think tax people are particularly bad at wanting to do everything. And so it's a real journey that I've been experiencing as well.
I agree with that too. Now, I'll throw something out there for you guys too to consider. Somewhere, first of all, your CFOs are looking to you to manage your department, and your CFO doesn't want to hammer on you every year that you need to control costs. She or he is expecting you to do that. So if you see an opportunity, take advantage of it. And there were times, and that'll buy you so much goodwill. Let's say there's a year that you're looking into the next year, and you got your business plan and your tax plan put together, and you're saying, you know what, I got more resources than I need to do this. It's pretty rare, but you can do this. And if you do a reorg and you get better people in or whatever, you might be able to save some money by cutting up a few people here or there. And if you go into the CFO and say, this is my reorg proposal, and by the way, this is going to cost less in the budget, man, that buys you a lot of goodwill. Maybe for the future, a year or 2 or 3 years out when you really need the additional resources. But just keep that in mind, because you're the ones who know most about your department more than anybody else. You know where those areas are that can be cut and should be cut, like whoever just mentioned. Tax people are renowned for doing everything to a T. Well, we don't always need to do that. And so if you cut back on some of that, maybe you save some resources there and redeploy them someplace else.
So this is Tony. One of the things I've had to do through 3 decades of doing this through the economic cycles is industries go up and down. And as Chris is dealing with right now in oil and gas, it's obviously a tight market. When it was financial services, before that, it was a tight market. It goes in cycles. We all know that. But one of the things is to think a little bit differently, thinking proactively, which is looking at upgrading. And this is a tough discussion because you're dealing with people, but look at your staffs and think about, as you do reorg, not going back, but going forward. Upgrade. One good person, you all know this because you're A players, but an A player is worth 2 or 3 other people. They're not just 10% better. They're 200-300% better. You're a complete package in tax, and you're a business person and a technical, and you've got leadership skills. The value proposition is huge. So while it's a down market, like in oil and gas, you can go out there and get some of the best talent out there and upgrade if you have the guts to do it. And you can save money doing it. You'll pay that person more than the 2 people you're going to let go, but it will be less than the 2 people's combined compensation, and you'll probably get more than double what you did from those 2 laggards. So you got to look at your team judiciously, not just where you have your opportunities to do, as you said, low-level work, but also upgrade on the quality of your team. Hard thing to do, but great leaders make those tough decisions when the markets are softer, when you got more financial pressures on your budget and your tax department. Tough discussion, but it's something you all need to consider when you have those opportunities. Look at it as an opportunity, not as a problem.
Yeah, and they can have great influence on the rest of the people in the department too. You bring the right person in, and I'm sure you all have seen this. I know I saw it many times. Amazing results from bringing someone in with a positive attitude, a positive can-do attitude, and getting rid of somebody who is just a constant, malcontent. It's just amazing what kind of changes there were to the attitude of people around them.
Tony, this is Mark. I agree with what you just said. I just think the other half of that is that as leaders, our job is to upgrade the people we already have. And, if you can do that with a group of 30 versus just bringing 1 person in, you can get even more upside.
Well, you're absolutely correct. Your job's to help develop people, but when they start to hit Peter principles and you know that they're not going to be, I've seen people invest so much time in people that was a waste of time. They didn't want to make the tough call, the tough decision to say, look, this person is never going to be that person. We're going to keep holding on to them in a down market, and we really can't afford to. You just discussed the compliance people who won't get it. You're absolutely correct. Some of these compliance people are never going to get the fact that 20%, letting go of that 20% is okay. They got to do 100%. You're going to, eventually compliance people are going to have to adapt and become problem solvers and good business people, or they won't have a job because AI is going to take that function over. We all know it. It's just a matter of time. The tax department of the future, and I do mean the near future, is going to be problem solvers, business people. It is not going to be people filling out a form and wanting to have the T's and the I's dotted every step of the way. So there is a transformation here, and it's tough. I get it. You're going to try to save everybody, especially new leaders. I have this conversation all the time with each of you guys that first step into these main leadership roles about being, this is not going to be easy, and you're going to be uncomfortable at times with this, but you're going to have to make some of those calls, because if you don't, they're going to call me to find somebody to replace you. I promise you. I have these conversations with the CFOs all the time. So it's a tough one, but keep an eye on that and look at your non-performers or average performers. And when the market's tight, when your budget's tight, actually do the opposite. Start thinking about upgrading then. Go against the grain, guys. Don't go with it.
I mean, based on that, would you always be looking to upgrade? Like, 'cause
always.
Part of the problem is
always.
How do you find that person that you described? If you know them, let me know. I mean, it's hard to actually find that person and then bring them in and integrate them. So if you have people that have potential, like you talked about talent development, which I assume we all are doing, we all have our star performers. So those people are going to continue to develop. I just think if you don't have the opportunity to always be on the outlook to hire somebody, then it's sort of hard, because you could get rid of 2 people, but then find nobody to replace them.
So great question, Mark, there. What do you do with those? I have clients that keep me and our company aware of what they have a soft spot. It might be transfer pricing. If you find a great quality transfer pricing person, or do you think this available in the market? Can we upgrade on Mary or Bob? And I'm honest with them. If we can't, we can't. I say, look, for the price range you can afford, you've got the Cadillac already. Forget about it. Though that's not your soft spot. Look somewhere else. But you need to have a dialogue with people who know the market and make sure you understand the market and availabilities. I've had clients that think they have a Cadillac, and I know they've got a Volkswagen, and sooner or later it blows up in their face. Before Tyco blew up, I knew Tyco was going to blow up. Before Weatherford blew up, I knew Weatherford was going to blow up. I just finished work with a major company that, had issues as well. You've just got to get an honest assessment. That's why these training sessions that you just went through are so important on assessment of your team and assessment of yourself. Can't stress it enough. Then you got to do something with it. That's where the rubber meets the road. I know this person, but I like them. I know this person, yeah, but they've been here for 20 years. Jerome walks into a company that nobody leaves, and he has to make tough calls. But that's what you guys as the future leaders will be having to do. And as I said, more of this is going to hit you guys with AI hitting, and it's going to make some disruptions in the market in the next 5, 6, 7 years that are going to make HR issues difficult and budget issues difficult. These people are going to expect savings. And the big four are going to shove it down your throats.
Yeah. And to follow up on that a little bit, Tony, we were talking earlier about the succession planning process. That's one of the things we did with our succession planning process. We would go and we would look at every management position in the company, in our department. And we would say, okay, who are the potential successors for the person holding that position right now? And we would sometimes identify 1, 2, 3 people. Sometimes we didn't have anybody. So if we looked at that, and let's just say it's a transfer pricing position. We didn't have a manager of transfer pricing, but to follow up on Tony's example, let's say we did, and we didn't have anybody identified for that. Well, that was something we would sit there and we say, well, if we lose this incumbent, then we're going to have to fill this externally. And we better start working on that, or we better start developing somebody else internally. And if there's nobody that we think can be developed to do that position because the incumbent is going to be promoted or whatever, then we would seriously start considering external searches. And that gives you a little time in advance, as opposed to having it just dropped on your desk as a major problem.
Tony, this is Tim. I mean, I guess it seems to me that it's probably really a 2-prong approach that you guys are really talking about, right? One is you need to be sure that you have the processes in place for development of your internal people. But at the same time, you need to know when to cut bait and make the move, and whether it's economic conditions that sort of drive that, or whether it's performance issues. You sort of got to be working both of these in parallel, probably, right?
Absolutely. Yeah, they go together. And the bigger the company, the bigger the budget, the more cushion you have. So some of us will work, if it's a $2 billion or $3 billion company with a small budget, you're going to have tougher decisions. You won't have as much succession planning. You just don't have the budget and the payroll to have the number 2 person really ready in the next year or two to be ready. That happens all the time. So there you got to deal with the realities of that. So keep that in mind as you're all assessing your companies. Big companies, sometimes, depending upon where the departments are based, have more flexibility to do internal development and have succession planning. Smaller, medium-sized companies, not as likely.
And I think this point on the discussion with the CFO, the approach that I typically took was, in most every discussion with them, was to think of it, I used to pretend that I was in their position. And, as Mike pointed out, our responsibility as leaders of those groups, I would normally go through this incredible internal process of, thinking it through from his perspective. If this is my call to make at that level, am I being honest with myself about the business case? Am I presenting the business case clearly? Am I presenting it properly? Over time, I think that you build, by taking that approach, you build the trust with the CFOs and those kind of people as well. That helps facilitate those kind of discussions, I think.
I agree with that, Tim.
Have any other questions from the group before we wrap up here? So, Tim, do you want to give just a quick lead in on session 3 that you're going to be giving and what it's going to cover for the next session?
Yeah, I think a couple of areas where we'll talk about strategic leadership, operational leadership, budgeting, and I think we have a 4th category here. But hopefully we'll lever right off of the things that Mike's talked about in these first 2 sessions and just pick up and go on from there.
And at this stage, if any of the participants see some topics they want to make sure we can slide in maybe on session 3 that would help them a little earlier, don't be afraid to send that on the forum. And if anybody's having any trouble accessing the forum and all the bios are on there as well. If you didn't remember what somebody covered and what company they're with, and contact information for all of the participants. So some of that networking that Mike referred to is absolutely something I think that I highly encourage you guys to start to talk to each other and bounce things off of each other when you think it's appropriate. In that form, you have the vehicle to do that, and you have the contact information as well. Shannon, is there anything else you wanted to cover before we wrap up?
Nope, I think you got it. I will send a follow-up email with the recording, as well as the documents talked about, the Bridging the Gap slide deck, as well as the links to the training event.
Great. Mike, thank you so much. Appreciate all your time and effort on these. I know the rest of the group does as well.
Well, my pleasure. Thanks for inviting me. Thanks to everybody participating. I hope this was of value.
Yep. Thanks, everybody.
Thank you. Thank you, Mike.
Thank you.
Okay.
Thank you.
Thanks.
Thanks, everyone.
All right. See you, Shannon.
Bye.
Bye.
Take care, everybody.
Thanks, Tony.
You are welcome. Everybody have a great day.